Hey, Kelly. Digital bank Varo Money was approved this morning by U.S. regulators to become a full-scale bank. It's a landmark case, and it could pave the way for some other tech-focused finance companies to do the same. Dozens of fintechs have popped up in recent years with banking products. Think of Square, Robinhood, SoFi, you've got PayPal's Venmo, but none are actually banks in the traditional sense. They instead partner with smaller community banks who hold those FDIC-insured deposits. Critics say it's unfair. If it walks like a bank and talks like a bank, they should deal directly with their regulators. Advocates, though, say it's great. The tech companies can focus on their platforms and user experience and help out some struggling community banks who might not be able to get as many customer deposits. SoftBank-backed SoFi became the latest fintech to apply for a charter just a few weeks ago. Square has a conditional approval for an ILC or an industrial loan charter. Robinhood did have one in the works, but it pulled that back in November. I spoke to Varo CEO Colin Walsh this morning. He says this is a way for them to lower cost and that other tech companies might be emboldened, but he says that there are no shortcuts. It is a lengthy process. So words of warning from the CEO there. Kelly, back to you.
Yeah, but also kind of words of warning to the whole banking industry. You mentioned Square, Kate. That's the one I was thinking of that had already kind of gone down this path. How quickly might we expect them to be on the scene?
They're looking at 2021, and their bank charter is slightly different. They have conditional approval. They'll have to get a couple more steps in there. But again, Square would be the biggest. Varo's a smaller startup, but Square could potentially get into other areas. And like Colin Walsh mentioned, it improves the economics for these guys, so they don't have to pay their partner bank. But that is one I would definitely watch, is Square.
Oh, yeah, and the whole banking industry as well. Kate, thank you very much.